Hello traders, the title of the video is How Fibonacci Helps Elliott Wave Analysis. Let's get started. The financial instrument that we are analyzing is KRDS Incorporation, Epic CDNA, Charlie Delta November Alpha. And we want to talk about how Fibonacci helps Elliott wave analysis. Alright, so one thing I need to clarify with traders is that if a stock is listed at X price, so they come into the market for the first day, okay, the initial public offering, IPO, alright, and the stock goes down, alright, you are likely to have what we call a correction. So you will see something like this. That what we usually see is that price during the initial public offering, first day they are listed, if the market is bearish, so they give a higher price for the stock, all right, so the market disagree and they sell it down, you are likely to see price going down like this. 1, 2, 3, all right, and then more reaction. So the first reaction usually will be a correction. Though you do not have any data here, that will be a correction. So market assume that the price that they are bringing the company into the market is too high. They do not believe that price. They will correct that price. Though you do not have data on your chart to certify what that corrective wave is correcting, just remember that that corrective wave is correcting the price, the initial price that the company is listed for the first time. So if they listed a stock $10 and the market disagree, the market will correct that price. Right? Okay, but now how Fibonacci can help our Elliott wave analysis. So you will see sometimes charts like this. You want to see whether the company was listed at this price or not, all right, or are we missing data? Do we have enough data, or is it because the company was listed, at that point in time, at that price, So now I'm going to start counting with the data that I got on my charts, all right? Because I do not have enough data, I can use Fibonacci to help me a little bit, all right? So price start going down. So I'm an Elliott wave trader, all right? And I'm just counting waves. So I say 1, 2, 3. Here it is. So the first thing that is coming to my mind is correction. All right. Now, hold on a second. I need to pause the video for 1 second. I'll be back very shortly. Thank you. So we have 1, 2, 3. All right, we are here. So we start counting where we don't have enough data, or the company is just being listed. Okay, that's all we can use. So how can we use Fibonacci to help us? So we can 1, 2, 3. We say, all right. So probably it's a correction here. Now, whenever you see that 1, 2, 3 like this, you can use Fibonacci retracement to the first portion of that price action. All right, from here to here, that's the first reaction, all right, of the ABC. All right, you apply Fibonacci retracement, and the level that you are watching is the 50% Fibonacci retracement level. Usually the zigzag pattern, or the ABC, the B part of the zigzag pattern will stop at the 50% Fibonacci retracement level. So though we can't see the eternal wave of this move down and 1, 2, 3, with the Fibonacci, I'm satisfied that this looks to me that is a correction. Either we are correcting the initial price, right, or we are correcting a missing data, a prior move that we cannot see on our chart. With that, I can call this 1, 2, 3 a correction. 1, 2, 3 correcting either the price or something that we do not have. Okay, so that's the first application of Fibonacci. Whenever you see 1, 2, 3, use the Fibonacci retracement and highlight the 50% Fibonacci retracement level. All right. Now, the next thing that we can do, you can see now as we continue to count our way, we see this reaction here, price bounce up after the 1, 2, 3, pull back, and then again, look, it bounce up again. So So we have here, this is another situation that we first, I talked about this before, how we handle complex wave. I will go over it, so you need to go back and watch that video. We have a double bottom chart pattern here. Okay, we can cover that, okay? It's a reaction, all right? That's how I handle it, all right? So you may disagree and say, George, I don't agree with this. That's fine with me, all right? I won't get upset if you say you don't accept what I'm doing here. I won't get upset at all. All right, so I cover this section because we have a double bottom price action, which is a kind of validation of that support level. It's a reaction. All right. So if I cover it now, we will see that that move bounce back up. Then we have this move down, this one down, followed by this move up, and this one down. All right. So suppose you disagree with my wave count. So we can use Fibonacci to go as we are going down. So price from 1 to 3 goes below that low, bounce up from blah 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 there. All right. You are wondering what's going on, what kind of Elliott wave pattern is developing. But that's all you have. You can just go one step at a time. All right. But now that I see the double bottom, I cover it, and I want to see what's going to happen next. Now we see 1, 2, 3 down. Okay. Now. Okay, so now what I'm going to do, here we are. So this section, you can see the price. Let's apply again Fibonacci retracement. So you see here, price went down and then bounced up. So we're going to apply Fibonacci retracement. So as I was telling you, anytime we see 1, 2, 3, we can use Fibonacci retracement, and we want to highlight which level? The 50% Fibonacci retracement level. Attention traders, let's zoom into it. Attention, we are here. Color it into pink. Here it is. That's the 50%. So we have 1, 2, 3. All right. Double bottom, we cover it. Now we see 1, 2, 3. We apply Fibonacci retracement, and our 50% is here. You can see that as it came down, it pierced through the 50% level before coming down to close down, and then inform again the last portion of the 1, 2, 3. So that's good. But some traders may say, George, but it did not stop exactly on the 50% Fibonacci retracement level. It does not have to. It can pierce through it, but it can close below it. All right. Sometimes it may not stop exactly there. As I'm going on, because now I'm trying to use Fibonacci to help my Elliott wave analysis. That's what I'm doing here. So, because I don't want to use the Elliott wave and make a wrong decision. So what can I use to help my Elliott wave go with the data that I've got? I'm using Fibonacci retracement. Anytime I see 1, 2, 3, apply Fibonacci retracement, highlight the 50% level. That will give me a bit of idea what is going on. All right. Okay. All right. So now I'm going to remove again this cover. I'm going to remove this reaction here. And then we're going to go back to the beginning. So you see here, price went down 1, 2, 3. All right. And then we have this reaction here, this one, this section here. From here to here. Do you agree? So 1, 2, 3, we are here. And then price bounce up. Okay, good. Now let's apply Fibonacci retracement to that price action. And one more time, we're going to highlight the 50% Fibonacci retracement level of that price action. So we say 1, 2, 3, we apply Fibonacci retracement, we highlight the 50% Fibonacci retracement level, price stop right there. Now there is this reaction here, boom, up. We apply Fibonacci retracement level to that level, and we highlight again the 50% Fibonacci retracement level. Am I cheating? No. See, this is the 50% Fibonacci retracement level. Okay, that's the horizontal line there. That's the 50% Fibonacci retracement level of this price action. All right. So first reaction, 50% Fibonacci retracement level, price came down. Completed. That correction is completed. Now another reaction, pew, this time up. Okay. We apply Fibonacci retracement to it. We use the 50% Fibonacci retracement level. Now, as I was telling you one more time, you can see here, after this reaction with this one here, you need to focus carefully. Focus, my friend. Don't let anyone disturb you, okay? After this reaction, price cancel it. So, cancel that reaction, all right, and form a double bottom chart pattern. All right, so let's go. Let's move on very fast. So, what is cancel it? Okay, come to the beginning of it. So, this session, we cover it, this one. This move down, we cover it, okay? Because it cancel it. But our initial move is still this one here. And this one also bounce up a bit, all right? So we may say this one, so this one has cancelled it. We don't like that. This move up is in the same direction like this one, all right? So we cannot say that this price action is correct in this one. Do you agree? So let me clarify that, so feel free to disagree, because if price goes up from A to B, the correction should be a contra trend. Do you agree? The correction should be a contra trend. Therefore, we cannot say that this move up is correcting this one. We can't say that. Yeah, this one was correcting it, but it canceled it. So now, what is correcting this move up? This one is correcting this move up, all right? But now it did not start from here, all right? It did not start from here, all right? So, but as you are applying this 1, 2, 3, you can see that you want to know what is correcting what. So now this one went down. This is the one correcting it, and then move down. Now we see another reaction here, and what is correcting it? This one, all right? But it went again below it. Are you paying attention? But something, though this one is correcting it, all right? It came to the starting point of, it came below this price action here, and also it did not start from here, all right? But now, because of that, you see now, so we have this, that's why I said to you, we must cover this double bottom, because if you dwell on it, we won't go anywhere. We will get confused, you see. But by now that I cover that double bottom chart pattern, I can move on now. I can move away from that confusion that starts arising in this session here, because I have a double bottom chart pattern. Now I move away from it by highlighting the double bottom chart pattern. All right. So now we have a new price move down. You see here, boom. What is correcting this price action? This one. All right. And it peels through the 50% Fibonacci retracement level. But what I want to show you here is that you have to understand what is taking place here. Stay focused, because some traders may get a little bit confused. I'm going to bring back again my Fibonacci. Remember that we were stuck here, and we have a bit of confusion because of the double bottom chart pattern. But remember that the 50%, I want you to, because otherwise you're going to miss the point, the 50% of this price action here is this one here, the pink line. Okay, you remember? But when we were applying, okay, the Fibonacci retracement to this price action, which one? From here to here, you remember? The 1, 2, 3 down, all right? Our 50% Fibonacci retracement for this move from here to here is this one here. Fibonacci retracement, 50%. We don't want to fool ourselves. That's correct. That's where it stopped. Yes or no? All right? All right? But now, the reason why I want you to remember that, okay, to remember the pink line, which is the 50% Fibonacci retracement level of this one here. Though, when we have the 1, 2, 3, that reaction here peels through the 50% level, this one. The reason is the professional traders were using the 50% of this one here, this price action here, which is the pink line. So they prefer the 50% Fibonacci retracement of this price action, which is the pink line, instead of the 50% Fibonacci retracement level of this one down. Therefore, the price pierces through it. That's my year, okay? My belief in this case that this is what is taking place. So do not be surprised that sometimes the price may pierce through that 50% level. But as we continue, let me remove some of my line. You will see that the Fibonacci retracement or extension is a very useful tool that can help our wave count sometimes when the wave count becomes a little bit too complex or we do not know what to think of our Elliott wave count, okay? So we've done it 1, 2, 3, 50%, stop here. All right, again, 1, 2, 3. Here it is. I haven't finished yet. Stay with me, all right? Stay with me, please. There are more to come. So 1, 2, 3. Let's change the color of this so you can see clearly. Would you agree that the Fibonacci can help our Elliott wave analysis? Have I demonstrated that Fibonacci retracement can help Elliott wave analysis? All right. I haven't finished the demonstration here, so stay with me. There's one more. Apart from the 50%, we will see one more example here. So stay with me, please. All right. So here we are. So I'm going to cover the double bottom. You see, that created a bit of confusion in this session. Now we know how to handle it. We handle it. So we have 1, 2, 3. So somebody may say, George, it's in fact, all right, a double tree, all right, a double zigzag. So 1, 2, 3, all right, and then 1, 2, 3, followed by another zigzag, 1, 2, 3. You remember the double tree? So you may hear Elliott wave traders talking about double tree, which is a double zigzag. I'm not very good at drawing, so don't be too strict with me, my friend. Or otherwise, I will Google it, okay? I'll Google that image, so to avoid all the people laughing at me and say, George, I'm not sure. I like you, but your drawing, why? I won't say that word, okay. Okay? Does it look like a double tree, double zigzag? A bit, okay, something like that. So first zigzag is this one. I'm getting there. Stay put, don't move, please, don't move. All right. Okay, so that's the first zigzag followed by, okay, another zigzag, but this is not a zigzag, this is a reaction. We can just put a straight line there, can be subdivided into 3. That one also can be subdivided into 3. The zigzag, we know 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3, 4, 5, if you can see the internal wave, and then 1, 2, 3 up, and then 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3, 4, 5. So it's a double zigzag, and this section can also be subdivided into 3, or can be just a straight line if we cannot see the internal wave, something like that. So that's what we call a double tree. You may Google double tree wave pattern, a double zigzag. So some traders may say this is a double zigzag, okay, a correction that continues because the market did not accept the initial offering price, and okay, there is a correction taking place, or we do not see enough data on our chart, and we are thinking that this is a double zigzag. All right. So going back again to the main topic again, talking about how Fibonacci helps Elliott wave analysis, we see that a 50% Fibonacci retracement was quite useful to get out of the wood and also covering, okay, the double bottoms where we are counting waves. All right. So now that I've done that, all right, remember the initial price reaction. What was the initial price reaction before any correction? Now, let me ask you, what is the initial price reaction? price action. What is the initial price action? Okay, here it is. Okay, I'm ignoring those two candle bar there. This is the initial price action. Price came down, yes or no? With the information I have on my chart, unless you have more data than myself, this is the initial price reaction. It's a move down. That move down was corrected by this one. Without this move down, we won't have this reaction, okay? So this is the initial price move. This is the first correction. This move up is the first correction that is correcting this move down. Then it continues to form a zigzag, all right? So now, we will now apply the Fibonacci extension to that initial price action. You remember how we do with the first area wave? All right. So the first wave is the first price action, isn't it? Yes. Then we apply Fibonacci extension to that, and we highlight which level? 161.8% Fibonacci extension level to set the limit for a normal third area wave. All right. Because normal third area wave should not exceed that level. It's only the extended third area wave will go above that level. Okay. So the initial price action is the first wave. Here, this is the initial price move down. Let's apply again. Anytime you see price action, the first move that you see, apply Fibonacci extension to that. If you are counting wave, to highlight the Fibonacci extension level, it will be useful to you to do that, and that will help your area wave analysis. First reaction, apply Fibonacci extension to that. So I'm doing that now carefully to make sure it's exact level. Okay, we want it to be on it. Okay. We want it to be exact level. That's it. So I apply my Fibonacci extension to the first reaction. You see now, everybody's happy. This is the first reaction. We apply Fibonacci extension, not retracement, Fibonacci extension. And we want to know the 138.2%. You see how the price, the 138.2%, that's the first line there. Color it into orange. And then the 150, have them all on the chart below. And the 161.8% right here. There is one line I'm looking for. Bear with me 1 second. I'm looking for the 200% Fibonacci retracement level. It's not showing on my chart. Well, it's somewhere. I'll go to the quarterly chart. Probably I'll see there. Let's give you all. I can't see either, but you. What is that level? The 200% Fibonacci. Let's put it on the closing price. Yeah, let's put it on the closing price and see what's going to happen. You remember what I told you before when we applied the Fibonacci extension or Fibonacci retracement? Not all traders apply the Fibonacci extension and retracement the same way. So sometimes some trader will put it at the, remember this here, very important. I talk about it at day pro trader. Some trader will put it at the low and the high. All right. Other trader, when I did that, I can see my 200% Fibonacci retracement level. And now let's bring it back to the closing price. To the closing price of the initial price, actually closing price, you see. Now we are now in the zone of the 200% Fibonacci retracement level. The reason why we need to see that level, we want to know where is that 200% level, is that the C part of the zigzag pattern can go down even to the 200% Fibonacci extension level. So as I'm talking about double tree or double zigzag, first zigzag 1, 2, 3, and second zigzag 1, 2, 3. All right. Now, normally we should apply the Fibonacci extension to this initial price reaction of that zigzag pattern. Are you getting confused? So we have two zigzag patterns. Okay, first one, 1, 2, 3. So this is the initial reaction of the first zigzag pattern, and this is the initial reaction of the second zigzag pattern. So we can apply Fibonacci extension to any initial price reaction for any pattern. So the multi-wave, first wave, second wave, third wave, fourth wave, fifth wave, the initial reaction of the multi-wave is what? The first wave. The initial reaction of a zigzag pattern is the A part of the zigzag pattern. We can apply Fibonacci extension to that level. Now that I apply Fibonacci extension to that initial reaction of the second zigzag pattern, you can see that the price is sitting in a zone of the 200% Fibonacci retracement of that zigzag pattern. Do you understand my English? Well, let me drink my tea. Alright, so it's at 200% level, because for zigzag, that level is very important for us. If it's going down, going down, going down, and reaching that level, there's a high chance we may see a bit of bounce. We need to be prepared and be ready to apply a top-down trading method in that zone. Alright, so here we are nearly 200% level. Alright, so I'm going to move my Fibonacci retracement, and I'm going to apply it to the initial reaction of the first zigzag pattern. What is the first zigzag pattern? 1, 2, 3. And as I apply Fibonacci extension to the first reaction, remember that what I'm saying is very important. Whenever you apply Fibonacci extension, apply both ways, either from the high to the low or from the closing price to the closing price. Because sometimes the other group will make by using it from the closing to the closing will make more sense, will be more practical, will be more useful than from the high to the low. So that's why you need to do it both, right? So you see like that, okay? So now I draw it from the high to the high, and where is the 200%? I cannot see it. Okay, how about it? Yes, I cannot see on my chart now. By adjusting it to the closing price, because I know not all traders use the Fibonacci extension the same way. Now here it's my 200% level. You see now, so by applying the Fibonacci extension to the first reaction of the first zigzag pattern, which is this one, this is first zigzag pattern, initial first reaction is this one. By applying Fibonacci extension to that, the 200% level of that first zigzag pattern is corresponding to almost to the same zigzag pattern. So here it is, let's put it here. It's called, it's almost in the same zone of this 200% Fibonacci extension level of the second zigzag pattern. So 200% of the first zigzag pattern and the 200% Fibonacci extension of the second zigzag pattern all coming to the same zone. Don't get confused, because when something becomes too complex, pick up the most important thing. I'm talking about initial price reaction. If you forget everything, don't forget that. So when we are talking about, so I'm talking about zigzag pattern, the first reaction is this one, all right? Now, when we are talking about a double zigzag pattern, what is the initial price reaction of a double zigzag pattern? Is this one, this move, here to here. That's the first move before the first correction. Yes or no? So this will be the initial reaction of a double zigzag pattern. So so you may say, George, we have a double zigzag pattern. That's true, George. Yeah, you can see it's a double zigzag pattern. All right, it's up to you. So now, if you want to think of the double zigzag pattern and you want to apply the Fibonacci extension to the initial reaction of that double zigzag pattern, it has to be this section here. And as always, I said it 100 times, when you apply the Fibonacci extension, apply it both ways, from the high to the low, and also from the closing price to the closing price. All right, so you see that now our wave count, our area wave analysis is making a little bit more sense now that we use the Fibonacci retracement and also Fibonacci extension. We were using a 50% Fibonacci retracement, and now we are using a Fibonacci extension of the initial reaction of any pattern, either a zigzag pattern or even the multi-wave or the corrective phase. We can apply Fibonacci extension to the first reaction of the corrective phase. Any pattern, you can apply Fibonacci extension to the first reaction of that pattern. Have I made myself clear? Did I speak a proper English to my Americans today? All right, so because today they make fun of me a bit, so that's fine with me. Okay, it's good. So people are happy. All right. So this is it. How Fibonacci helps. All right. Area wave analysis. I hope this is not another blah 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 from my side. All right. If that's the case, all right, hit the thumbs down and say, George, you wasted my time today, and I will stay subscriber. But if you continue, all right, all right. But if you like this video, all right, feel free to give us the thumbs up, and also to share with your friend on Google Plus, on Twitter, and also on Facebook. As always, if you have any question or suggestion, all right, feel free to put in the comment section. I read it. In due course, I record another video, to clarify, your question. We are the STW24 traders talking about how Fibonacci helps area wave analysis. Do you think that Fibonacci retracement and extension can help your area wave analysis? That is the question. So to summarize this video, we use 50% Fibonacci retracement for any first correction of the initial price move. We apply Fibonacci extension to the first reaction of any pattern, either a zigzag, a double zigzag, all right, or even the multi-wave. Happy trading to you all, and I speak to you soon. We are the STW24 traders talking about how Fibonacci helps Elliott waves analysis.